The SelfieDogCoin on Solana is on a massive run. The price is going up a lot. The question is, what's driving that rally? Is this a lot of small retail investors buying in, potentially stabilizing the price at a higher level? Or is this short-term manipulation by the whales that simply just pump and dump? Let's have a look at the on-chain metrics. Let's try to figure out what's going on. Now we are currently at 5.4 cents roughly. We are up 24% today, 50% this week, and more than 200% this month. But things haven't always been rosy. We had massive pump and dumps before. This is a crash of 97%. Here's another crash with a higher high and higher low of 84%. And so if we were to buy at current prices, are we going to be exit liquidity at those high prices? Or will this rally last longer? Let's have a look. I'm always interested in the outliers of the on-chain data. And there is one outlier in terms of transactions. So on the left side, we see the number of first-time traders versus recurring traders over time. This seems to be relatively stable. There doesn't seem to be anything specific here. But on the right side, we see the number of token transactions, and that peaked on the 10th of October of this year. Now the 10th of October was over here. The vertical line shows the beginning of the 11th of October. The price was in the middle of a rally. At that point, we went up another 34%. And now compared to today, we are up 60% since then. Now, what kind of price rally is healthy and what kind of price rally isn't healthy? It's healthy if we see a lot of retail investors jumping on the token, when we see the number of retail investors going up. And at the same time, if we see that even more supply is bought up by the whales, then I'm very, very bullish. Because if the smart money is buying even more, that's great. The whales tend to make the better calls. They've got more money. They used to make the right trades in the past. The small wallets, they might not buy and sell at the right times, right? They are still small. And so crypto is a game of both luck and skill. The larger a wallet is, the more likely it is that the right calls are made. And so that's why I like to split up the trading volume in different cohorts. So on the left side, we see the trading volume in US dollars split up by small retail, medium-sized retail, and large retail. Small retail is all the wallets that have less than $1,000 worth of the SelfieDogCoin token. Medium retail is up to $10,000 worth of the token. Large retail is from $10,000 all the way to $100,000 worth of the token. And so obviously trading volume comes in waves. The price is close to its all-time high, but the trading volume really isn't. So that's good because we don't want to buy at peak attention. For example, here on the 24th of July of this year, we also saw the price being very, very elevated. When then attention goes down, the price tends to bleed as well. The fact that we are not yet at those mega peak levels is good. Now, when we take that trading volume, that US dollar trading volume, and we normalize it to 100% every day, we come to the right chart. And so we can see over time that large retail tends to make up more and more of the trading volume. And so what seems to be happening is that there are a few large wallets that tend to buy up more and more of the token. It's not necessarily more whales that jump in, but there are a few whales that buy more. And the reason for that is probably that small retail continues to accumulate as well. On the left side, we see the number of wallets that have at least 10,000 selfie tokens. So at the current price, that's roughly $536. For the chart in the middle, we go at 10x, so that's now roughly $5,000. For the chart on the right, we have $50,000 worth of minimum holding. Again, we can see a very similar pattern. We can see how the number of holders increases with the price. And we tend to see more wallets coming in for small retail than for large retail. However, when we dive a bit more deeper into the numbers, we can see that the percentage held by the whales is increasing. So it's not the number of whales that's increasing, it's the existing whales that accumulate more, that buy more of the token. Again, that's something I believe is very positive. Medium-sized and small retail tends to get less and less of the token. On the right side, we see how much value is held by those different cohorts. And again, the whales have almost 30 million worth of the token, and that's growing much, much faster than what we can see for retail. So retail from bottom to the current level maybe grew by 50% or so, but the whales, they moved from 1.3 million all the way to 30 million. Whales tend to be much more aggressive in their buying and selling. They can sell very heavily when the price rallies up, but they can also accumulate very heavily when we are depressed. And currently they are obviously continuing to sell. That's very, very good. Now there are some approaches to spot those rallies early, and I want to talk about this in a second. But before we do this, feel free to subscribe to this channel. I publish videos regularly here. I cover various meme coins regularly, and I always look at the on-chain data, trying to be as objective as possible. Now have a look at the following. We are tracking various influencers on this channel. We are tracking their wallets, and we try to buy with those influencers before the influencers promote this in their Twitter or in their YouTube channel. I, by the way, never buy before publishing a video. I always buy after publishing because I don't like that conflict of interest. I don't like to dump on this audience. However, most other influencers are different. And so here in Premium, in the Premium membership of this channel, we've got an influencer trade channel. And we're tracking various influencers, and we see how Kyle Chessy dollar cost averaged into the Selfie token starting from July 22. So that was over here. Subsequently, the price exploded, another 500% really almost. And we can now see how he's selling his Selfie. So that was on October 17 and October 26. So that's over here. Now this wasn't necessarily perfect timing, but still, it seems like on average, the people that are well connected, the people that have a large following, tend to make better calls. Again, the same thing that we've seen already with the whales. The whales tend to buy when we are low, the whales tend to accumulate, and then they sell aggressively once we are high. And so here is that influencer, Kyle Chessy, 133,000 subscribers. We are tracking 12 of his wallets. In total, we are tracking more than 400 wallets in Premium. And there's even an entire tutorial on how to find those influencer wallets, how to track them, and how to interpret those tracking signals. And so I think it's important, especially if you actively trade meme coins, to have some kind of an edge, right? To know something that most people don't, and to potentially also bounce off ideas with a community that's skilled as well. So that's why we've got those dedicated chats, right? Those are all in Telegram, dedicated chats on various altcoins where we discuss on-chain analytics. By the way, the tool that you've seen over here is also accessible via Premium, right? So you can plug in any Solana token in here and look at the same data for any token. And so I think Selfie can rise further. Yes, Kyle Chessy is taking some profit, but overall, it seems like the whales continue to accumulate, and that's in general healthy because at the same time, we do see how retail buys as well. If you got some value out of this video, feel free to subscribe. I publish videos regularly. Like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in Premium. Cheers.